Just for Indian markets and investors, but across the world. I mean, several words being thrown out there: carnage, sell-off, bloodbath, all of that. We're going to break down with, of course, all our editors in this special edition. Let's start with the biggest question I think everyone's asking right now. Is this something which is going to get worse before it gets better? We know all of the reasons: global markets, concerns of what the Fed will do, Bank of Japan, yen carry trade, etc. More pain to come?
So, I think, and Tamanna, we spoke about this during one of the shows as well, right? That if there is interventions that come in from any of the finance ministries or the governments, notably Japan and US, then it's a separate case in point. But otherwise, falls like these don't last necessarily only for a day. They don't get bought into so quickly because there is the fear of the unknown. Unlike an event that happens, which is let's say a weak budget or a rate cut decision or a rate hike decision or so on and so forth, wherein the impact is largely known. Here, there is a mystery of the unknown, which may keep the smart buyer at bay, waiting for the tide to turn before she or he decides or their institution decides to invest. So I fear that we may not have seen the end of it. And from the way European markets are trading at a point of time when we are talking about, or the US futures are, I mean, unless things change, wherein some announcements are done by any central bank, Japan or US again, maybe there is still some pain to go.
Right. Let me put it this way to add to what you said. Let's look at some of the key indices that we are looking at. We all know that everything has run up phenomenally across US and in India and most markets. I'll first look at US Treasury bond yields. They are down to 3.7%, which is what would happen if the Fed cuts the rate. So when will Fed cut the rate? How much is a question the markets will watch. That's number one. Secondly, NASDAQ is down roughly about 5.7 to 6%, though individual stocks have crashed. But most of the constituents or stocks forming the NASDAQ have run up again, like they've skyrocketed. Nifty is down roughly since, if I take from 25,000, roughly we are looking at some 4.5%. Other indices more or less at the same level. Now, the only index that has fallen sharply is Nikkei, which is roughly about 19%, including 12.5% today. So if I leave Nikkei out, there is still a lot of more room for cuts. It might happen slowly. It might be a situation where we are getting into a correction kind of a market. Whether this is a price correction or time correction, we don't know, but this looks like a price correction.
I think price correction is especially happening in sectors and stocks where we have seen a lot of run-up happening. So you have the mid-cap, the small-cap index, which is the reality Nifty. From the Indian market point of view. I'm talking from the Indian market point of view, and it's been taken as an opportunity to do that, and that correction is happening now across the board on those sectors which is there. So the classic thing is that you saw the Nifty FMCG being the least falling today in that sense. It was I think one of the first only index which was up in the morning, and then it fell by 0.5% or so. So this defensive play which is coming into the market now, flight of capital going to those defensive sectors, and those sectors especially which have run up a lot, who have done 100% returns in the last 1 year or so. We are seeing some kind of correction coming in mid cap, small cap, and
it's reminding me of 4th of June. Where obviously very, very different.
We didn't have a defensive play coming in.
Absolutely, you had a defensive play coming in. On 4th of June, right after the election results, when that whole carnage happened, pick up and see which were your top running stocks. It was all your FMCG stocks. And at that time, everyone was coming up on the channel and saying, Acha, their time has finally started. The rotation has come. Defensives, no matter what happens, people will buy toothpaste, soap, etc. It disappeared in a day. I'm not saying that's going to happen here. Obviously, because that was a very different story.
That's a flow, I think, which will decide where it is going to
I'm saying the defensives get pulled up, and this whole story gets pulled up every time there are jitters. But then again, these are companies which are growing at very slow rates compared to the kind of alpha the Indian market is used to, and the stocks haven't done much. They've sat out this last 3-year bull run.
I don't know. Vishy, any thoughts?
I just want to say I'm not getting into the way the market is performing at this point in time. But then there is everything is not short term here. there is an element of slightly more long-term, slightly more under the radar issues that will flow out. So the first of which is the fears of a US recession. Yes, a lot of experts that we spoke to today and even people who put out their notes are saying that there is a likelihood, but it's still low. We may see some slowdown, but a recession sort of a risk is very low. I am not entirely sure if that is true. At this stage, it's pretty much anything could happen, right? So one argument that people in the market are making is that the US has been slow or has sensed a delay in its rate cut. It has pushed it to September, and that is a very recent sort of development. Them announcing that they will start look at a first rate cut in September. The expectation was it would come much earlier in the year, and it didn't. And that's why the fears that US might come in late into the game, and that might push the US economy into a kind of a recession. What that will also push for is across the world, there will be ripple effects. You will see some impact here in India. You have companies who have gone out and taken these special trades with the yen as a backing currency, borrowing in yen and then converting it into dollar later. They've taken that because there was a big benefit on the interest cost that they were earning, right? Those things don't vanish overnight, even if the broader equity markets correct.
But in terms of the number of companies who actually have that kind of an exposure from, so you're saying 2-3 things. Let's just come to the Indian exposure first off, because that's a question that we're getting time and again, and we'll take some viewer questions as well. Is India that vulnerable to the yen carry trade in relative terms?
Let's not let's not mix those two. There isn't. But the currency market is vulnerable to any kind of movement, right? So even if it is a handful of companies that face an issue with their repayments, that problem will show up in the market.
The other point that I want to make is a lot of the moves that we've seen today are not necessarily fundamental in nature.
That's right.
It's not because there is a yen impact which is fundamentally felt by Indian companies. When there is a risk off and when money flies out or if money doesn't come in, stocks will correct independent of whether fundamentally there is an impact or no per se, because this is a sentiment that is turning. And I think when this sentiment turns in a market which is overvalued or in a set of markets which have run up quite a bit, there is no saying as to when it stops, because we were expensive at 25,000. We are expensive at 24,000 if you want to make that argument. And we can make an argument that we are expensive at 22,500 as well. So this need not be just fundamental in nature. Sure, after a point of time, after 5 days, you will cut down the tails and get down to the pockets and squares and figure out, okay, this sector actually gets more impacted because of the yen exposure otherwise. But right now, I don't think the market is making that distinction.
So there would be a change in the kind of earnings growth estimate, which will be calculated over the next few
Even
days
if that doesn't happen, Sajeet.
Weeks on the impact, not immediate. But on an entire financial year basis, what could be the impact on that? Of that?
But I want thoughts from all of you on this. Now, unless somebody has to make a point.
I have a question to him, but I'll come later.
The only point I wanted to make is that if there's a currency impact, it will show up in March, not during the middle of the year. That's when the repayments kick in, and that's when you will see most of the impact. So where yen is at that point in time will matter.
Okay. So now let's play the devil's advocate and try and think of what this does for the future, aside of the fact that we know sentiment has turned, etc., and stuff like that. There is a graphic that we have of how brokerages have shifted their narrative and argument around what could happen to rate cut cycle, right? So Citi expects 125 basis points by the end of 2024, JPM 50 each in September and November, BOFA starting September. So that's the first point. And two, the technical factors. For the longest time, we were hoping that oil prices should come off. They are decisively off, 70 and 75 currently. We've been hoping and praying that yields come off.
They have.
Look at the US Treasury yields. They have come off quite meaningfully, right? So aside of the fund flow picture, the technical triggers which typically bring about an excitement in risk assets are there in play. So when the dust settles, which at some point of time it will, do any of you believe that there is a chance that the recovery could be V-shaped? Because hitherto we've been used to seeing a V-shaped recovery in risk assets, equity markets. Can that happen, or could this be prolonged? is the question. I have my thoughts, but any of you?
Okay, I'm going to stick my neck out and say yes, there will be a V-shaped recovery and it will be sooner than anticipated.
Okay.
And one of the reasons I'm basing that on, Niraj, is the conversation we just had, about half an hour ago, that there's going to be a series of appearances that various Fed officials make through this week. And those comments that they make are going to be watched very, very closely after the kind of carnage we've seen. Any kind of positive indications, any kind of dovish commentary will be seen as a positive. If it's a sentiment which is a problem, turning that sentiment, or that sentiment might not take too much time to turn. We've seen that time and again, money waiting on the sides, nothing is fundamentally changing. India is not looking hurt in any way economically. I mean, I think you are going to see a recovery. You're going to see it fairly quickly.
That's
one bull.
That's
relatively one bull.
That's managing.
Sorry,
That's managing the sentiment, which Tamanna is talking about. But more than that, it would be more of a flow which is going to come in, with foreign flows which are going to come in, which may slow down a bit, because a lot of trade that goes into emerging markets are funded by low-cost, financing, which actually, is from Japanese banks, which is there. So,
but Sajeet, that doesn't end.
It doesn't.
So the impact doesn't end. At 22,000 or 23,000, the impact will be priced in.
Also, what is the quantum
so now
of it?
The risk is getting priced in.
Yeah.
Earlier it was risk free. Now it's risk priced, basically, which is there. So the people on the fringe, which were taking this money, will not be there.
So you don't believe it will be a V-shaped recovery?
It's not going to be V-shaped recovery.
I will agree with him.
Will the inflows come in? Yes, it will come in. But will it be as big an inflow? I don't think it's going to be that.
Okay, now 2-3 parts to this. One is that Fed is going to cut the rates for sure, whether it's September or October. It will be a little more aggressive,
earlier
also. Yeah. I don't know. I mean, that's a speculation. I'll not get there.
I don't think
they will pretend to do it earlier.
So, so the line of thought here is that Fed will cut rate. RBI is unable to cut rate. Let me look at our own market, come back to our own market. Now, what's the biggest problem that we are going to see? Managing the retail investors' mood and sentiment, as you rightly said, that's going to be a tough ask. Because I'll give you 4 data points here. 1987, 1998, 2008, 2024. So between 2008 and 2024, we haven't, I'll say 2010, when we came out of this one, we haven't had a major, except for the pandemic, right? So now this one is a situation where asset bubble has built so much, so the fundamental part will not come into play immediately, but you will slowly start feeling the pain. You will slowly start seeing earnings cut into earnings. Fed might cut the rates, but here the cost of funds are not going down as yet. So that's where I have a question: how would RBI approach this? So therefore, right now MPC meeting is on, and day after tomorrow they are going to come out. So how will RBI look at it? This will be on top of their mind. Yeah. Forget inflation data, forget growth and everything. I mean, this is a crisis. In the past, central bankers have managed in 87, 98 and even 2008. Now this is a completely different kind of crisis that we are looking at, because at 2 ends of the spectrum, one end of the spectrum you have rates going up and the currency going up. At the other end, rates are going to go down, but we are caught in between.
But I'm not sure if India is a crisis though.
It's not a crisis. No, I'm not saying it's a crisis. We will get engulfed.
Okay,
that's the whole problem. Therefore, V-shaped recovery would take a longer time.
There was a question on the asset bubble even about 2 months ago. When the last monetary policy announcement took place, this question was posed to the RBI, and their firm view is that they are not seeing a bubble. Yes, there are concerns in pockets, but those concerns, there are always going to be concerns. You don't have a perfect system. You're always going to have pockets where the situation is not ideal. Having said that, the RBI has a lot of confidence in the way that the Indian financial markets, broader financial markets, are performing, and that they believe that they are at the right track. So if they are going to hold the rates, and they've been holding the rates for now, 10 policies announcements now. Yeah. So they are very assured on themselves that this is the right place to be, and they're going to stay put. Now, whether the Fed's decision to cut rate in September, and therefore the RBI, when they meet in October, will they be forced to cut it then? All of these questions are a maybe if
everyone's
possible.
penciling in April for India.
Yeah, so that's
2025.
That's what 6 months after the Fed starts cutting.
Everyone's. I mean, no one is penciling in a 2024 calendar.
100%. It's not likely
in India at all. What changes? Why should Shaktikanta Das today, Governor Das, look
There
at
is
all of
nothing.
this and say, "Oh, let me do something
There is
about
nothing
it"?
that is
I mean,
pushing
he's
them.
the only central banker who hasn't, bothered everyone, unlike Bank of Japan
And there's a reason. There's a reason why Shaktikanta Das over the last 2 policies has been making an effort to specifically say we are not worried about what the US Fed is doing.
Yeah.
We are our own central bank.
But
we
does the RBI
not
cut
as of
to
today.
change the sentiment? Is the question, Vishnu?
Huh?
Does the RBI really need to cut to change the sentiment?
They don't. They need to just change
But
their
central banks
stance.
don't cut for sentiment's sake.
At times they do.
At
March
times they do.
2020 was an example, right, Sajeet?
May of 2022, when they started the rate hike cycle, that was specifically was a sentimental rate hike. It was not like nothing had changed in the domestic economy. The expectation was that this war is not going to end anytime soon, and therefore things will start showing up badly on the inflation side. We need to at least signal to the market that we are ready to act. After that, they've continuously hiked. That's a different story. But when it happened as of May of 2022, it was only sentimental.
Yeah. So my last quick 30-40 seconds, and typically institutions, when they buy these days, and now we know that institutions follow a mix of fundamentals and charts. So people who are going long, go long and don't necessarily cut their positions because stocks have reached a particular level. They wait for the tide to turn, and even if they can't time the top, which because nobody can, right? They keep a trailing stop, if you will, up to a particular level that it slides down to. I think that's what large short sellers do in times like these, that they are short. They will not extinguish their shorts just because the levels have been reached so swiftly. So I think what could happen is that shorts will stay in the system. They will let it ride until the tide turns. Yes. So instead of trying to, so it could well be a V-shaped recovery, right? Tamanna is saying there will be one, Sajeet is saying there won't be. Who knows?
You're saying a softer U maybe?
No, I'm saying I don't know, but my limited point is what institutional people who are shorting right now would do is wait for the tide to turn before they cut. So there is no need for a retail investor who's watching us right now to be a brave heart and buy just because the markets have fallen 1,000 points.
Yeah.
Wait for a bit, bide your time. Buy it 5% higher. It's
absolutely,
okay.
Yeah, absolutely. So there is no nobody should just rush into it. I think that's a question everybody is asking us on YouTube and other social media. What should we do now? Be calm, don't sell, just stay on the sidelines, and don't buy till you get a clarity. See, buying should be there only when there is clarity. You had euphoria, and now you have a completely different situation. So should not be caught between the two.
Absolutely. So a lot to unpack. Remember, this is just a slice of all of the analysis that we're doing on NDTV Profit. You can go to our website, our social media handles, and you'll see a whole host of views over there. But we just wanted to give you an amalgamation of all the conversations we've been having since early this morning and as this unfolds. The pain's definitely not going away in the next 24 to 48 hours. So let's make that very clear. And if you need to be on top of all of the events unfolding, you know where to come. But for now, thank you so much for joining us on this very special edition of Editor's Cut.